Okay, we are right now at 5:25 Eastern Standard Time. Just finished the New York session closing bell. Obviously, biggest event in this week, these few days, was the Black Monday stock market crash and pretty much the global equity crash around the world. Now, yesterday, after the biggest crash on Monday, Tuesday we had a little bit recovery, but today U.S. equity still ended up lower. So if I take a look at the benchmarks, now we still have a all red zone in the Asian equities, but the European equity is much better, especially the major indices, all just under 2% change. For the U.S. equity, we're still closing in the red territory. Not as negative as Monday, but still not a lot of good pictures. And, we have a lot of speculation whether this is the beginning of a bear market. Is it really going to turn into a very bearish year for 2018? Or it's just a healthy recovery? Now, personally, I do not know which scenario is what we are seeing right now, because both are very logic. But all I say is that you want to trade what's happening in front of your eyes. Even if this is just a short-term retracement, it's still going to take market a couple of days before they regain confidence. Now, that's something very important. The market is not just going to get into a panic mode and the next day become so positive and happy, optimistic, unless there is a significant catalyst. But in this instance, there wasn't even a catalyst to begin with. So that's why we might still see a risk-off sentiment continue in the market. And that's basically why I took few trade out of this sentiment. And notably, I actually short Australian dollar against Japanese yen, also short Australian dollar against Swiss franc. So the notable two safe haven currency, Japanese yen, Swiss franc, was a pretty good opportunity for Monday and Tuesday. Now, obviously not reacted the way I wanted yet, but I'm still quite confident in these two trades. And another thing is that the US dollar index continue to climb up. As you can see, we are at 90.34. So that is another significant handle that the US dollar index has recovered from 88, 89, now is firmly above 90. So will this continue? I think most likely it should continue now for two reasons: that dollar had been oversold all things 2017, and now since the last NFP data, or the whole reason an equity market went crashed on this Monday was the inflationary pressure and worry for the high inflation, the Federal Reserve to tighten up interest rate further. So that, of course, correlated to a strong dollar, and that's what we are seeing in front of our screen right now. So I think the US dollar will gain a little bit momentum, at least for the next couple of days. Now, don't forget, tomorrow we also have the Bank of England, and that event can be either way. It can be a hawkish event, it can be a dovish event. So we would definitely not recommend anybody to buy or sell British pound at this moment, because it's best to wait after the events and you have a clear direction, unless you know what you're doing. Because of course, if you're getting right now and you're getting the right direction, then yes, you will have the biggest benefit and reward. But on the other hand, it's really just like 50-50 gambling. So I don't like to trade this kind of low probability trade. So that's something to watch out for. But as currently, I think the weak currency is Australian dollar and New Zealand dollar. Now, New Zealand dollar, we also just had the RBNZ statement. Nothing had changed. There's no surprise. And they still keep a very cautionary tone. Now, as I mentioned, New Zealand with the new Labour Party coalition government really lost a lot of business confidence from the business sectors. So, and the current risk-off sentiment, obviously Aussie and New Zealand will be the most bearish currency. On the other hand, Japanese yen, Swiss franc, and US dollar are a very strong currency for now. Now, tomorrow, Bank of England will provide market with another catalyst to trade for the currency traders. Okay, that's it for now. I'll be back for the London session update. Thanks for watching. Bye-bye.